Hello YouTube and welcome to my new video about my own backtest tool in C++ with QtCharts, which I programmed the last 10 years and improved over the years. Today I want to show you some insights about the tool, how it's working, how to do professional backtesting on the highest level, and some examples about some backtests, for example S&P and nasdaq correlation. Also about some random strategies with simple moving average, Bollinger bands, fair value gap, candle pattern, support resistance, everything you see out there in the internet. People claim to be whatever successful strategies. I'm still searching for the next success story. So to be honest, I don't have any profitable strategy yet, and I didn't found any the last years. What you see here is one backtest with a losing strategy. So this tests 6 different assets in parallel, like euro, US dollar, Brent, oil, gas, gold, and nasdaq. And you see the big green line, or the bold green line, is the summed up profit over the year. This is a 1-year backtest with 365 days, and it's generating 25,000 negative points. The only good thing here is that the trade amount is evenly distributed, so it's linearly increasing. A dream, yeah. Crawl the internet for random strategies and prove them with a backtest. Very fast and accurate results. No manual trading needed or risking real money. Results within a few hours for years of backtest. And possible to automate the strategies for getting rich quick, and you don't have any psychological hurdles to overcome when a robot trades, because trading with a few $1,000s or even $100,000 is impossible for most of us people. I have 10,000 times failure already. I tested all indicators and their combinations. I tested all assets, stocks, forex, futures, indices, commodities, options. Over the last 10 years, I met a lot of other programmers and backtesters sharing the same misery as me. And beating the spread and the commission seems to be impossible, and that's what I'm still working on. I'm trying to beat the spread and be profitable. What is the concept of a backtest tool? Yeah, as you see here, it's a robot on the right. It's like cloning yourself and having yourself working on simulated paper trading and then visualizing them in very nice dashboards like you see here. So that is the dream of everybody of us. And as we know, we are all lazy. Most of us don't even create a spreadsheet or don't even create an Excel and do proper paper trading or simulated trading or even proper trading with real money to see if their strategy works out or not. To program a backtest tool, you first of all need a historic data. You can download it from tickstory.com. This is one of the providers from Dukascopy Bank, which has very accurate data with volume. You can transform the data into arrays in your tool. Then basically the robot can see the same what you see in some tick charts or second charts. And then you have to calculate the candles and indicators, and then the robot can see the same what you see. Basically, you see candles, indicators, volumes, and whatever you program into it. And then you have to do the same like you do manually. So you have to do simulated trading. So you iterate through your data, starting from day 1 till whatever yesterday. You can backtest days, months, years, the last 10 years. And then you show the results in a very nice dashboard, and hopefully you see that you are profitable. Biggest problems at backtesting. So the data size is a problem. 10 years of tick data for nasdaq, for example, is 36 gigabyte in CSV. You have RAM limitations on your computer. So for example, I have 64 gigabyte RAM. You cannot load all assets for 10 years into your RAM. That's impossible. So you have to drill it down to either a few assets or 10 assets 1 year or something like this. You have to work on the speed. So loading the data and calculations may take hours for one backtest. So I don't want to waste hours for every backtest. That's why I worked on the speed a lot. And easy stuff doesn't make you rich. So you need to be the world first with a new powerful tool to be capable to handle the new stuff like order flow, volume, whatever. Because every 10-year-old kid knows programming or scripting already, and MetaTrader also offers all kind of backtesting or automated backtesting with optimizing. So everybody can do indicator backtesting. So this doesn't work out. Most of my time I spent in optimizing speed and size. This is the most crucial part, I think, in backtesting. And you also suffer of a lot of bugs, which you have to find and clean up. Finally, I can load data and run a 10-year backtest within a few seconds. And I think I'm one of the only guys worldwide who has such a fancy backtest tool, or at least I didn't hear of anybody else. Please let me know if you know anybody. First example of an idea. So the correlation between S&P 500 and nasdaq. Everybody of you knows, or we think they both run the same the whole day. And we can do something like arbitrage trading or sure bet, which is called from sports betting. So whenever they both open up, like what you see here, and you have a 10 points gap in between, you can short the one on top and you can long the one on the bottom. And then you bet for that they close the gap. For example, in the end, you have a gap of 1, which is basically the spread you have. And then you have a winning of 9 points. And this is basically the idea behind that. On the top right, we see a screenshot, which we will see soon zoomed in. This is one example on the real market. As you can see here, we have the USA 500 leaping up on top, and we have the USA Tech, NASDAQ basically, which is at the bottom. And this is like, I don't know, 3-4 points at S&P and some points at NASDAQ. Just an example which I captured live. And here we have it visualized in my backtest tool for some seconds or some minutes or 1,800 seconds. And the trading idea is, as you can see here, with a start and the exit, S for start, X for exit. And you can see here the gap is big. So it's like 5 or 10 points gap at the start here. And at the exit, the gap is nearly 0. So within this arbitrage trade, you can make like 10 points. Same trade, next trade here, you have a start here and the gap is like almost 20 points. And then the gap closes again here to 0 points. And some seconds later or some minutes later, you have another start with also a gap above 20 points. But here is the question, it doesn't close the gap anymore. It seems to go wider and wider. So when to exit? So this trade would have lost, I guess. And this is what you want to backtest. I visualized it in a different way. The new blue line here in the middle is the gap. As you can see, it's only above 0. So whenever we have some gap increase or gap decrease, I will start a trade. And then I bet on the gap closing or the gap going wider, because you could also do the arbitrage trade the other way around, that you bet on a increasing gap. That's what it looks like for 3 years. Always remember it's without spread. So for example, here every year seems like to make around about 0 to or minus 900 whatever to a plus 900, and it's always like 9,000 to 10,000 trades. So consider it with spread, it's devastating. And this is with spread combined, and you see it's like making 10,000 points loss. It's even points, not even ticks. So basically there is no correlation. It doesn't work. Here we have 5 years to see also the market shift over the years. So 5 years ago, there was almost no trades. As you can see in the middle, the trade count didn't increase much. And then starting with COVID, the trade count increased, and I think also the candle size increased over the years, so the average true range increased as well from 2015 to 2021 or something like this. So we can waste this idea, it's not working. So whenever you look on the S&P or nasdaq for any correlation to enter a trade, it's not giving you any advantage. So you can get rid of this. More examples. So backtesting with some indicators and some combinations of indicators. For example, I picked out some fancy indicators. We have the fair value gap. This is where whenever the market quickly moves and there is some kind of gap which is not closed. We have volume spikes on candles, which might have any kind of impact. And we have Bollinger bands and SMAs, like very classic. Some kind of fair value gap strategy, trying to find any impact of this fair value gap, including Bollinger's, SMA, whatever, without spread. Remember, it's like 5,000 points plus after 10 years. But at least here we see the trade count. It rises linearly over the years, so that's fine. But the profit and loss curve seems crazy. So during COVID or whatever, during 2019 to 2022, there was some kind of linear profit. But since the last 2 years, roughly, there is no profit anymore. And this is also very, very dangerous when having a strategy or when backtesting. You never know, does your strategy work anymore? And that's what we see here. There is some kind of positive impact for 2 or 3 years, and then it's not working anymore. Another random idea, go with the momentum after a small pullback. Also very easy whenever the market pushes in one direction very quickly, and then we wait for a small pullback. As you can see here, the market leaped down, we have a pullback, and at this red square, we entered short. In this case, this trade lost. But the backtest looks like this. I entered a static 20 tick momentum, which is required to start the trade. As you can see, the first 5-6 years, there was not much trades because the market was not volatile enough. And then since COVID, as you can see, the volatility of the market, the candle size, the average true range, it exploded. And that's why we see a lot of trades here. And it looks like it makes profit, but same here, over the last year, it's steady. So I also wouldn't consider this anymore as anything to look deeper in. And also it's without spread. It's 22,000 trades with only 7,000 points. And imagine one trade on the nasdaq, it has already 0.5 points spread or 2 ticks. Okay, but how do we know when we hit the spot? How can we see or how can we prove that any strategy is good? And yeah, I just changed the strategy we have seen before, and now the robot is cheating and the robot knows the next 5-minute candle and only trades when this next 5-minute candle is in his favor. And now you can see this is with spread, with a 0.5 point spread, so 2 ticks spread on the Nasdaq future market. This is realistic. And you can see we have now 12,000 points profit. Or basically take it times 4 and then you have the ticks. So this is like 50,000 ticks profit. The problem here is as well, the market changed. And you can see here from 2022, we have made 4,000 points profit. But in the year after this, in the 2023 year, which is not finished yet, we only made whatever, 800 points profit. So does this mean the strategy is dead? And yeah, also look on the count of the trades. Yeah, it has to be linear in best case. Same for your profit curve. If your profit curve looks linear through all years, if your trade amount looks linear through all the years or time period, and also if the distribution on the hours, on the weekdays, and also the distribution of short and long trades makes sense, then it's a good strategy. You can check out my other video where I explained my strategy on binary options, which made me €500,000. Just check it out to see a backtest, which really worked over many years. Thanks for watching and see you in my next video. If you want to cooperate with me or have any questions, please just write a mail.